Good morning, traders. Russell Sandiford here for Easy Markets, your Friday Trader Talk market rant. Well, we all woke up to that sad news coming out of Barcelona overnight in the tourist strip of La Rambla. Another tourist attraction being attacked by terrorism, which also made the US dollar and the safe havens have a very interesting overnight US trading session. Let's get straight into that. So first of all, we saw two major things going on. Firstly, the Trump administration again having another wobble with Gary Cohen, one of the key economic advisors in his team. There were rumors he was going to resign, and I think that rumor has since sort of fallen away in the background. But again, it's another notch in that Trump's instability belt, which doesn't help the US dollar at all. So I've got a chart up here, which is actually gold. Gold surging back to 1288, 1289, just as we speak here to open the Asian session. Most likely we're going to be in for a risk-off sort of trading day. So be careful though, it has already moved quite a bit to start the last part of this week with the US dollar woes. So look, it's dangerously close to that 1290 and 1291 high of last week. Whether gold can carry on and get through 1300 today remains to be seen, because there is no real economic data except the Canadian CPI tonight. But I am still a gold bull. I think there is some legs in the potential move above 1320 even. That is the same sort of picture, obviously in the inverse way there on dollar yen. So the flight to safety saw dollar yen see saw the yen see some pretty strong bids, and that obviously drags dollar yen down. We were very bearish when it was at 111 earlier this week, because dollar yen does move in big chunks, but it's very sensitive and reactive to that US dollar sentiment, and the rate hike probability that dealers and traders globally are trying to price in is kind of slipping away as we get drama after drama from the Trump camp. Nevertheless, specifically for traders, it's at 109.50 this morning to open the Asian session. Not sure if that's going to carry on much lower below 109, but it may certainly take a run towards that 109 handle. For the other trading opportunities today, Aussie obviously as a risk currency and the Kiwi as a risk currency both slid back in the last part of that North American trading session last night. 78.90 is not really a level on the Aussie, so I would expect 78.50 to be a much more likely area that we're trading at come lunchtime here in Sydney, when Tokyo and Hong Kong are in full swing. So take a look at maybe the Aussie and the Kiwi as your risk currencies to perhaps unwind a little on the downside. For those of you that love trading the news, the dollar CAD story should be a good one to get back to towards 127.50, assuming that Canadian CPI is not a bumper number. If that being the case, the US dollar will win that battle between the dollar and the Canadian dollar. For that reason, when it's at 26.80, it could be an interesting trade to consider up to, like I said, 27.5. As always, though, keep your powder dry, because this risk sentiment that we've seen is for now here to stay until we roll into more key data points next week. And if you need a hand, just give us a call here at the desk at Easy Markets.